Question here is, how is HouseHack different from Grant Cardone? All right, massively different. First of all, Grant Cardone's business, Cardone Capital, is a syndication. And syndications, what they do is they're really a partnership. So you identify a property generally, and there have been some allegations of this, and I've seen some numbers around this, but I don't want to confirm that this is the case, but there have been some ideas that maybe Cardone will buy let's say, $20 million apartment building and then sell it to his own company for $23 million and sort of pocket the difference. And you can kind of scale that numbers. I don't know. Now, that's okay to do if you're improving the condition of the property, but if you're really doing nothing other than putting your brand on it, probably not the best argument for suggesting the property's value just increased because you just put your name on it. But anyway, that aside, those are just some allegations. We don't know if those are absolutely true, if that happens all the time. We don't know. But the point is, let's say then you have this $23 million building and then you buy it as a partnership. You buy it as a partnership, then you get distributions. So you get depreciation. You have to deal with the tax, you have to get your K-1 and your distribution letter. You have to deal with the fact that you're a partner, essentially. So it complicates your taxes a little bit. But the big thing that you want to remember with a syndication is you're usually a partner, a limited partner, and you're looking at probably somewhere between, the traditional institutional model is what's called 2 and 20. So like you'll see like 2% asset under management fee, and then you'll see a 20% take from the manager, so that could be like the Cardone in this example, on any kind of appreciation that occurs on the property or extra cash flow above a certain point. In the case of Cardone, I believe the fees are about 1% for the asset, but he takes somewhere between 30 to 35% of the appreciation and the cash flow above a certain point. The fees are very, very high, in my opinion, for the personal investor. And what this really is it's a way to invest in real estate without you having to do anything, right? That's really what that is. That's not necessarily bad. I personally think syndications are extremely expensive. But hey, maybe if you could find somebody who can promise you a really good deal or whatever, you actually think it's a good deal, fantastic. HouseHack is not you investing in real estate. It's completely different. And so I'm not even competing in the syndication space. So in my opinion, these are so different. It's not like one versus the other. Even though you're asking that question, I think that's because people are like, oh, you both promote stuff on YouTube. Like, okay, that's fine. But the similarities really stop there because HouseHack, my real estate startup, is a company that really wants to create, and we've got a path for this, and all of the details in our slide deck and everything will be coming out for our Reg A fundraise, probably between April to June. I'm hoping for May, maybe even April if we can get it out. We're already raising money from accredited investors. You can learn more at househack.com, non-accredited coming up. But really, the goal is, how can we make HouseHack the vanguard of real estate? In other words, rather than making money off of people's fees, we're trying to eliminate or massively reduce fees that exist in real estate. And there are ways we can do that by arbitraging basically fixer-uppers, what I call wedge deals, and actually adding value to them, stabilizing them, and then figuring out from there how can we take portfolios, whether they're multifamily or single family, and give people an opportunity to invest in them at basically potentially low to no fees. That's essentially becoming the vanguard of real estate, or the Robin Hood, if you will, of real estate, right? Commission-free trading, right? That kind of idea. So HouseHack is a company that you're investing in. So you're investing in stock in a company. It's not ownership in real estate. It's ownership in a company. And the company is creating a platform for making investing in real estate low fee and extremely accessible. That's what HouseHack is. Now, HouseHack will own real estate. Bare minimum, we think we would be like an Invitation Homes, where we could just buy real estate and hodl it. That was sort of the original idea as like the bare minimum. That's already easy enough, in my opinion, knock on wood, hashtag no guarantees. But we think we can actually take that idea and expand it even more. And instead of being a company that potentially trades for 2 times book, we think we could be a company that trades for, 10, 20 times book, depending on what kind of platform we could create. So we're really excited about that. But as you can see from my definition, we're not a syndication. It's a company. It's totally separate. It's totally different. It's much more similar to if Vanguard were public, you investing in Vanguard, than it is you investing in a partnership on some real estate building where a promoter puts their name on it and takes, a 30% fee or whatever. Very, very different from that. So hopefully that gives a little bit of clarity, because while I'm not providing all of the details yet, because we're working those through to make sure we have a very, very clear set of messaging for you, and not only SEC reviewed, but attorney approved marketing and pamphlets and projections. We haven't released projections before, and this time we will. So all of the people who are accredited who have been investing, we've been very clear. Like, there are no projections. We don't know. We're so early, we don't know. Now, those people who've been investing early, they get a benefit. They've been getting basically free call options. Not really call options. You could read the PPM to understand what they are, but basically like warrants, which are like call options on a company for free for investing earlier. And we're raising money at a 1-to-1 valuation. So there's in my opinion, you're in a position where there's zero dilution day one, with the exception of sort of minor little fees or whatever for filing fees or whatever. But what the beauty about that is, my opinion is, look, the basic idea is that if a company sells for 1x book, there's really no value that you're even putting on the company. You're just basically raising cash, which is phenomenal. It's a great way to get in as an investor. And we're going to maintain that 1-to-1 ratio for the Reg A. There's no company dilution. Like, usually people put in, $10 into a company. That represents $9 for the company and the idea, and $1 for the actual cash the company gets. That's called dilution, right? That's like you raise $20 million at a $200 million valuation. 90% of that just went to sort of brand and the idea. In this case, 100% goes to cash with HouseHack, which we think is wonderful. And it's the biggest thank you that we could give to the people who watch us on YouTube. So for us, we look at not only the valuation we're raising at, but also the future, what the future could be is really phenomenal. I mean, again, no guarantees, but a 1-to-1 valuation, worst case scenario, should, we think, at least double to be like a worst case scenario, sort of like Invitation Homes or whatever, where you buy and hodl real estate, because they sell for, depending on where the market is, somewhere around 2x book. But if you actually create a platform, a technology, you create sort of that vanguard of real estate, it can be substantially higher than that. What that is, we don't know, because it hasn't been done before. And then people are like, oh, how's this different from like Zillow or Opendoor? I mean, in my opinion, massively different as well. I'll just very briefly explain that. We're not flipping homes on the market. We're not reselling homes with agents. We're not, we're buying homes with agents and wholesalers. Anyone who wants to send us deals is fine. The United States has become very, very small, by the way, after flying around as much as we have been. We're going to Florida this week to explore Florida real estate. We're going to have a very diversified portfolio of real estate that we're going to use as sort of the basis for the platform we're creating. But we're not trying to flip homes in the way that Zillow or Opendoor do, where, just watch some of my videos from HouseHack where we walk through Opendoor listings and you just have this complete embarrassment of a property listing. We don't want to put properties on the market. We don't want to deal with that. We want to buy properties, rent them out, stabilize them, and then use that as a basis for how can we create the vanguard of real estate. Now, we have a path for that. Obviously, no guarantees, but we are creating something that hasn't been created before. So we're very excited about that. Obviously, there's risk with any kind of investment, but yeah, I want to make that clear, because I think the most common questions I get are, when can non-accredited investors invest? And we're thinking between April and June, hopefully April. That's the goal, but it just depends on when the SEC review goes through. And then by that point we'll have a lot more information as well. But that gives you at least some differences. Somebody here asks, what happened to the AI software? Yeah, so look, in my opinion, AI is like a buzzword that people use. Every company should be using AI. So we don't develop the actual AI, right? That's what Google does. Like, we use Google as the basis for our AI, and then we use Google's basis. It's kind of like using the API from ChatGPT, which we could use as well, and using that as the basis for building your own tools on that. And so we have that, right? For example, we have a deal finder, we call it the Wedge Finder, which is built on the AI that Google has created, and then we train their models to create our own, essentially, AI based on our training. So think about it kind of like you buy an Optimus robot from Tesla, and then you train it to do exactly what you want. Maybe you just want it to sit in your office and kind of move its hand up and down. I don't know. And then it gets really good at doing that. Like whatever you train the AI to do is your thing. So that's what we do, right? And we actually think, obviously every company should be thinking about this, but AI could be fantastic for preventive property management, deal finding, valuation. I don't think it's anywhere close to yet on valuation, but potentially could be somewhat useful. So there's a lot of work and perfecting to do for AI. But that'll all happen over the next decade. That's not something that you have to pull out of your butt today and say, oh my God, we got the best AI in the world. Anybody who says that today is like, no, you're lying. AI ain't that great yet. you can't do AI yet without real human involvement anywhere near at this point, in my opinion. So I'm very excited about that. Very, very excited. So, but speaking about dilution, I will be posting in full the Boxable video today. I'm just going to post the full interview, and maybe in the future I'll do sort of a more cut up version of it, but I'm just going to post the entire thing. It's like an hour and a half long. What I want you to pay specific attention to, though, is remember how we've talked about dilution already in this segment here. Something to consider is the valuation at Boxable. And then you have to determine yourself if you think that's worth it. This is not me trying to compare to Boxable. I have nothing to do with Boxable. I'm not invested in Boxable. I'm not an affiliate of Boxable. I was solely doing some quick valuation math. And off the top of my head, if I remember correctly, it was something like if you invested $1 million into Boxable today, that would be worth roughly $330 of cash. So in other words, you would be paying $999,777 in dilution, which is basically just brand value for Boxable. Because I was thinking about it, I'm like, well, what if I invested $1 million right now into Boxable? How much cash does that get me, right? And yeah, okay, look, straight up, to be blunt, in comparison, it shows you if you put $1 million into HouseHack, it literally equals $1 million of cash. Right? Yes, I will compare. I will selflessly compare, shamelessly compare myself and say, if you put $1 million in HouseHack, it equals $1 million of cash. You pay zero for my ideas or the brand or whatever, right? A little bit for fees or a little expenses, obviously, that have already been incurred, duh. But there's no brand value that is included in that. Whereas here, $1 million into Boxable equals $330 of cash. And that's because they're raising money at over $3 billion of valuation. It's whoa. Okay, so you really have to believe in the idea. So anyway, that's sort of my thought, my thesis. So anyway, I'll post that video, later today. Maybe even this morning I'll just post it. So stay tuned for that. And you'll see. How do you make money on HouseHack? Yeah, fair question. Somebody writes, I used to work at Boxable. You're not too far off. I won't add any commentary to that. So how do you make money on HouseHack? Yeah, that's actually probably the thing we're most excited about. And I'm not prepared to reveal that right now because it would be somewhat anti-competitive. But we think there are massive opportunities for the next 20 years to milk massive amounts of cash flow while at the same time becoming the vanguard of real estate. Now, even me saying that sounds too good to be true, but let's just say with the vision that we have, I'm betting my entire net worth on it. Everything I have, my car, my house, my plane, my net worth, my stocks, everything I own, I am betting on HouseHack because I will keep throwing everything I have at HouseHack because I believe in it so much. I think the idea that we have, at bare minimum, is a phenomenal competitor to Invitation Homes. That's the bare minimum in my opinion. That's the safety net. That's like, oh, our ambitions didn't work out. We're falling to the level of Social Security, right? I shouldn't say Social Security. I should say Medicare because it's crap. We went to poverty. That's sort of the bare minimum. But with the big visions that I have, I think the investment that I'm making, going all in, risking everything that I have for HouseHack is because I believe the idea we have will be a multi-billion-dollar idea. So I couldn't be more excited. I mean, let me put it this way. You'd have to be an idiot to spend $13 million on a plane yourself and sign on that debt yourself and pay for flights yourself for a company. That is, I pay all of the flights for HouseHack right now. Every dime of flights is paid for by Kevin. So I can fly around and make sure we have the best start for HouseHack. You'd have to be an idiot to do that. Unless, of course, you thought that was going to become a multi-billion-dollar company in the future. So that's what I believe. People say I'm crazy, but then, we'll see. Yeah, you can invest internationally into HouseHack. Will HouseHack come to North Korea? Korea hack might be a couple decades before we get there. But we were we were joking about well, actually not really joking, but we were kind of like, how can we invest in Canada now that Canada has sort of banned foreign investors? We're kind of like, is it time for HouseHack.a? Anyway, sorry, bad joke. Anyway, so that gives you a little bit of an update. I appreciate the question. I think it's a good question. So there we go. Somebody says paid for by Kevin's media company, not actually Kevin, right? I mean, that's really nearly one and the same, right? I mean, if you think about it, it's my media business right now is taxed as a pass-through entity. So the money that I make from, what I think are really good programs, by the way, like it's not like the stuff in the programs is stuff that I actually do, right? In my stocks and psychology money group, in my real estate course, the do-it-yourself property management courses, those courses are things that I actually do and actually use to make money. Like that's the basis of HouseHack, right? Like you want to know the strategies HouseHack's going to employ. 0 to Millionaire course is like a perfect way to see that. But yeah, look, the money that I make goes into right now an S corporate structure. In the future, it might go C corp media stuff. But it's basically a pass-through entity. So I receive that money, and then I pay expenses, right? I don't know how much that really matters. I mean, you could make the argument that the media business covers it, which we probably should just make that argument. I could just clarify that now that, yeah, the media business pays that, which again is the S corp, but that just means I get less pass-through money from my media business, right? So I don't know how much of a difference that really makes. Whether it's media biz or Kev, because again, like I am the media biz, right? So like pretty much everything I do is the media biz. I don't know if that matters. So it's, yeah, I mean, of course, obviously it's a write-off for the media biz, right? Because I make Instagram content or YouTube content. Yeah, I mean, obviously there's the argument that, hey, well, the media business can operate because I'm able to be back in the studio regularly, right? I think there's a very clear argument there that the media business is only able to keep going because I'm able to fly around the way we are. So, but I don't know that really matters that much. Anyway, so, but hey, look, I'm all for transparency, so we'll just make it very clear. HouseHack does not pay plane. What we call, my S Corp is called the Paffrath Organization, doing business as Meet Kevin. That pays for the plane, takes a tax write-off for doing so, creates brand value or whatever you want to call it, advertising value for the channel or for Instagram or whatever, and maybe the programs on Building Your Wealth and enables me to make this content, and then whatever I get left over is what I have left over. Now remember, I personally signed on the debt, and you could look this up. Like my wife and my names are on it, so we're on the hook for it. But anyway, I always want to be very clear about that. So we've been audited already. That's very normal when you're trying to file with the SEC. You have to have audited financials. So DB McKinnon already did our first audit, but the first audit only goes through, I think it's September 30th. So we are completing our next audit within the next week, and that's what we're going to send to the SEC. So that way the SEC gets a full audit. I'm not sure if it goes, I think it goes through either the end of January or the end of December. But either way, yes, obviously when you do a Reg A, you have audited financials. So yes, they will be audited by a Big Four auditing company. So, all right, let's move on. Thank you for those questions. Very, very good questions, very fair, very reasonable. I'll always answer them.